Muadh@muadh.com. Just wanted to take a quick look at EEV as a way to play the market in case the market is due for a pullback. Now, this is going to be an odd view based on the RSI analysis, so it's not something that we can necessarily duplicate. Every stock is going to be different, and I just want to show you that the idea here is just to draw lines on your RSI. Try and see whether the lines make sense to you. There's no standard way of drawing the lines. It's pretty much just take what you can get, see whether you can formulate an idea as to what is going on. Now, before I do that, this is a 5-year weekly chart for EEV, emerging market pair ETF. Want to go and take a look at a five-year monthly, so the same chart but monthly now. And I just want to concentrate on the recent move. Now, keep in mind that the stock had been on a major drop since the highs here in 2011, just pretty much been grinding low. But suddenly, over the last couple of months, going into last year, or the last year or so, we've had a slight improvement. Not the best, but slight. And just want to reinforce that this movement that brought a change in the stock. So let me get that right here. So the movement corresponded with this RSI moving to 3-year highs. So it's always good to understand why stocks move, especially after they've been out of favor for a while. And also here, go back to 2013, something like that. We can see that the RSI broke out to 3-year highs, or the MACD. So the MACD 3-year highs, RSI monthly 3-year highs, and even here the main MACD was at 3-year highs pretty much. So that does account for the move from about the higher teens. So that does account for this breakout, either this breakout at about 18 or this breakout at about 19. Either way, the stock went on a 50% gain over the next couple of months. So not a bad move. So generally speaking, we captured some of this move. Why? Because the stock did meet the minimum requirements for a breakout. Now, I want to take an odd look at the stock, which is the weekly, 5-year weekly. I want to draw 3 lines. The first line is pretty obvious. It is the RSI lows line, like that. Okay, and what I've done is taken the most recent low that touched the area at 30.9, and then of course this low here, and you can see right now it is coming back to test the same level. So here we are seeing a chance for the stock to stabilize, potentially even move higher from current levels. So that's one line. There is another line which corresponds to the previous break or the breakout. So there was a breakout somewhere here. So we just figure out where this move began here, which was this RSI movement. We can draw a line from here, and you can see again, as of right now, we are showing weekly support on that line. So that's the second line. Let me show you the third line, which is a little bit of an odd way of looking at markets, but let's do it. And so what I did is I pretty much started with this high here and took this RSI high, and I just drew a line. So don't try to kill yourself trying to reproduce the same line. It's just a line that I drew, and I made sure that the line made sense going backwards. In other words, I drew the line right there, and I'll explain here in a second. Number one, we came close to this, touching that line there for the highs there. Eventually we break through this little node here for the pullback of those highs. We touch that level there for that high, and then eventually we do come and break through this trend line support for another break for this move to fresh lows. Also, let me draw that again. I just want to show you that, in other words, this line makes a lot of sense over the last couple of years, going back to 2011, so about 4 or 5 years of data. Here we can see uniform activity above that line and back below it for the highs there. Now what is important here is once we moved above this line in 2015, we started this move. So once we moved above that line here, we started this accelerated move to the upside. Okay, now let me remove that and show again that once we take that line. So the moral of the story here is just find a line that makes sense as you are doing your research and see whether you can use that information in the current market situation. So here we moved above that line and the market went higher. So from levels right there. Okay, we came back and hit that line with uniform activity, the same line, for the precise lows on the weekly chart right there. So the timing there was great. And now it looks like this could also be where it coils back above the line with uniform action, suggesting around here that somebody can take a calculated bet that this is going to play out in terms of a bounce to the upside. So we got three lines. So the first line is this line here. So let's go back to our three lines. First line is the one we just drew right now here, which is coming into play right now. Okay. The other line was, of course, the line connecting the lows on the weekly chart, and the uniformity line. So let's draw that, which is this line here. And then we can draw a line from there. And all of these lines, strangely enough, or at least to be consistent with the chart, are indicating that the stock or the ETF has come back to test that same level right there. So as long as it is holding on that RSI level, one can assume that you can take a position here and set a stop maybe 5% from your purchase price and see whether you can gain anything anywhere from 10 to 15 to 30 to 40% in the coming weeks if one can be patient. Otherwise, if it doesn't work out, one can get stopped out. No big deal. Eric Muadit, Muadit.com again. Here what I'm trying to stress here is in trying to understand very confusing markets, sometimes an odd look at the charts and an odd look at the RSI, especially when you draw a line that seems to have made sense over a period of years. If it's responding to that line in the current market, you can take a bet and see what happens. Eric Muadit, Muadit.com. As always, good luck, peace, and blessings. E-A-C-S.